500 members. And the church here in Anaheim was 16 members. So I've spanned the gamut from 16 members on up. Also, here in California, I also run an investment advisory firm that we focus on managing investments for individuals and families. So that's kind of more my experience is I'm not a CPA and I'm not an accountant and I'm not an attorney. So some of the things that we cover are going to touch on accounting and going to touch on legal issues, but please be aware that I'm not an expert per se in those areas. So take that information with a grain of salt. And so with that, I'm going to share my screen, which is going to make it hard for me to see any of you while I'm sharing that. So that's why we're going to try to hold off on questions until the end. And let me see here. All right, can you see that slide there? Thumbs up. Okay, good.
Yes.
All right, so I'm going to put you over here. And we will see if we can go through this here. All right, so here's an overall agenda for our time together. Excuse me. We're going to begin talking about a rationale for why talking about financial ministry or financial administration is important in ministry and in congregations and the church, denomination, etc. We're going to talk about what is the objective of financial management in a church. We will talk about how mission and strategy relate to finances. We will talk about structure, accountability, and ethics. We will talk about financial policies. We will talk about financial statements. We'll talk about ratio analysis. And if you can hang on until the end, I will show you what I think is a beautiful financial report. Some people may find beauty in normal financial reports. I would agree with that. But sometimes financial reports get have the reputation of being dry and boring. But I think I have one that you'll find beautiful. You notice on there's one thing that I left off, and that is stewardship. I didn't think we could fit in these topics today and stewardship. I think stewardship, there's a lot we could talk about in stewardship, so I think we'll have to leave that for another day. But that's what we're going to cover on this day is these topics here.
We're booking you, Jason.
And I also think one interesting thing too is I think for stewardship, there's a lot of good and accessible resources out there already. And as I was doing research for this presentation, some of these other parts of church financial management, there's not a whole lot of material out there that is easily accessible for congregations. A lot of it's derived or targeted toward nonprofits or towards for-profit industries. And so I think hopefully we'll be able to add a little bit of value to you here with this one. So first of all, a rationale. I'm not going to go too far into this, but I think it's important that we realize that we have a theology of financial management and stewardship in the church. I believe that financial management is a theological issue. I think and stewardship is a theological issue. And so I think it's important to remember that as we go through today, but also to think about what is our individual and what is for our congregation, what is our theology of financial management. We're not going to go into much of that. Again, that's another one, but that's an important thing I think to think about is that when we as finance people are working on finance statements and financial presentations, it is a theological issue and it is an aspect of ministry. It's not just a part of business. Part of it too, I think, is that financial management supports and it enables mission accomplishment in the church. And so financial management of church resources is ministry. So this I found pretty interesting. There's a 2002 survey of nonprofit organizations. Some of them were faith-based, like churches, and some were not faith-based. But in this survey, I think it was done by the Lilly Endowment. or the Lilly organization. But stakeholders were asked what factors would increase their confidence and trust in these organizations. The most important one was program outcomes and effectiveness. So how effective are nonprofit and church programs, and what do those programs create? What do they produce? But secondly, all of the remaining top 5 factors for building trust in an organization had to do with financial records, financial administration, and financial policies. And so I think it's important to note that what we do in terms of finances has a very significant impact on how people trust our organization, what people think of our organization, and that can be a critical element in ministry. So here are the kind of 2 of the most important aspects of financial work in a congregation. The first one is, what is the primary financial objective? We're going to get into detail in this in just a minute. The second one is financial policies, and we'll get into that following the primary financial objective. All right, so the question is, what is the primary financial objective of the church or of an organization? What are we trying to accomplish with our finances? Now, in the business world, for-profit businesses, the goal is to maximize shareholder value, maximizing long-run risk-adjusted profits. That's kind of the general goal of for-profit businesses. In nonprofits, there was a Lilly study done on this, and when they surveyed these not-for-profit businesses, most of the board members, CEOs, executive directors, pastors, sessions, church boards said that their goal was financial break even. They said that what they really want to do is try to make sure that they have enough income to match their expenses. If they can do that, then they're happy. Now, there's this book here called Financial Management for Nonprofit Organizations by those 3 authors down in the bottom corner there. This book is, it's a very helpful book if you're looking for a resource, kind of a more advanced resource. This would be helpful. It's about 400 pages or something like that, and it's pretty thick, but it's a very helpful book. But they argue in their book that having a break-even objective is a weakness. They argue that if you're trying to focus on maximizing net revenue or attempting to just break even, it's going to force your attention on controlling costs, and it's going to focus your organization on short-term financial objectives. So to say that again, if you believe that the goal of the financial goal or financial objective of your church is to just break even, it's going to force unintentionally your attention on controlling costs and aiming towards short-term financial objectives. So what they are proposing as an alternative is that your goal should be to maintain a certain liquidity target. So not just to break even, but to have a liquidity target, which we will define in a minute and talk more about. And that should be the goal, is to maintain that liquidity target. So definitions. An organization, first one is solvency. So an organization is solvent when its assets exceed its liabilities. Now, in terms of assets, we're talking about everything from cash to investments, to property that's owned, to buildings that's owned. Everything the church owns is assets. And liabilities, of course, are anything that the church owes. Any payroll outstanding, any short-term loans, any long-term loans. So an organization is solvent when the assets exceed its liabilities. A different definition, though, is liquidity. So an organization is liquid when they can pay their bills on time without due cost. And so these authors here argue that we need to focus on maintaining a liquidity level that ensures the future of the organization. And we can do this by maximizing and protecting cash flows, while at the same time being cost effective, not necessarily minimizing costs, but being cost effective. And a huge important part of this is financial accountability, which we will talk about in a minute. And so the alternative that they're arguing then is that instead of a church focusing on just trying to make sure that income matches expenses, that a more appropriate goal is to focus on managing the church's cash position and the cash flows, which will maintain a liquidity target for the organization. So why do they think this is a more appropriate goal? So nonprofits that do not have enough liquidity in their system are often forced to divert their attention from mission accomplishment, and they are focused to coping with financial pressures. Now, in order to fix these liquidity issues, nonprofits turn to the following things. Now, I have to admit, when I was reading this in this book, I first came across this book, probably 5 years ago or so. And when I was reading it then, and again, when I was reading it recently, when I was hearing what happens to nonprofits, the things that they do in order to fix liquidity issues, it was just and I just kept popping into my head, this is what churches do. I see this in churches all the time. So maybe not the first one, but the next two, and especially the third one. But one of it is they will have to turn their attention away from accomplishing their mission and starting to find some way to get a line of credit from some type of financing organization like a bank. Or they will have to divert their attention from mission accomplishment into trying to gather additional donations from individuals or grants. How many times have you been part of a church that kind of goes, they get through their, a half or 2/3 or 3/4 of the budget year, September and October, and they say, oh, we're not being able to meet our budget. We need to start sending out additional donation letters to try to get additional congregation members to give more to the church. Tell them there's a need. We need to start raising more individual donations or grants. And then the last one, when liquidity issues become even more of a problem, organizations will tap into the principal portion of their endowments. Now, the important thing to remember here is that these strategies, these things that organizations and churches do when they start to lose their liquidity, their cash flow, is that these strategies are not sustainable. So important things here, two things, that when churches start having to do these three things, line of credit, asking for additional donations, or tapping into the principal, not only are they detracting themselves from their main primary mission, but also these strategies are not sustainable in the long run. So again, here, these authors are arguing that the primary financial objective of a congregation or a church should be to maintain a liquidity target, enough liquidity in the organization to protect the organization and its mission against seasonal and cyclical cash shortfalls, and to build a financial resource base for future program and facility expansion. I think reflecting back on the beginning of the pandemic, those first couple months of, was it 2020? I forget the year now, I get so confused, but those first couple months of the pandemic, I think the pandemic has shown us exactly how important this goal is for the church. Donations were going down. People were not giving into the plate. People were not able to attend congregations. Many churches that I know had a liquidity crisis. They had bills to pay, salaries to pay, but they did not have money coming in through the normal regular donations. And so I think that's an argument for why this approach here is very critical and very important for congregations moving forward. So why is maintaining a liquidity target important? In a slowdown, in an economic slowdown, a regular business, a for-profit business, they can adjust their outflows downward in order to decrease the demands on cash. A car company can scale back on the amount of cars that they're producing. But for nonprofits, it is difficult to adjust downward our work product. So we can't really, it's hard for nonprofits to cut back on the programs and services that we are providing and lay off. We typically don't lay off workers like some of the tech companies have been doing recently. They lay off some of their workers. And so that adjusts or eases the demand on cash for those organizations. In nonprofits, it's really hard to scale back programs or staff when you have some kind of slowdown without having a huge impact on the mission of your organization. So it's hard for nonprofits to scale back their work, their efforts. And also, donations can change in volatile and unpredictable ways, as we just talked about with COVID. Donations can dry up very quickly in unexpected ways. So therefore, they argue that liquidity has a greater value for the donative nonprofit or nonprofits that rely on donations, which most churches do. So if an organization sets financial break even as their financial objective, this usually implies that they are unwilling to earn significant surpluses. I've heard this a lot in congregations as too, is churches are often against the idea of running a budget surplus, having more income than expenses. Some would argue that if there's money coming in, that money needs to be spent out as quickly as it can, because it needs to be spent on ministry and programs right away. They think that building up any type of cash reserve is antithetical to the gospel. Some would argue that. But I think the case I'm trying to make here is that that is not the case, and that there is a rationale, indeed it's imperative for congregations to build up significant cash surpluses. So moreover, if your focus in a congregation is just on building a balanced budget and achieving just a small surplus, these are not true effective measures for the following reasons. They tend to spawn incremental thinking. We do next year similar to what we did this year, just a little bit differently, a little bit more. They tend to put a ceiling on growth hopes, and they tend to put a floor under cost reductions. So they're arguing that this focusing on balancing a budget, and even a balanced budget with a small surplus, tends to box the organization into what has been done in the past, maybe cutting things a little bit, but not cutting things too much, maybe growing a little bit, but not growing too much. And so if we recognize that maintaining liquidity target is a more valuable goal, then organizations should be encouraged to operate at a surplus. Now, there is one thing that we're going to caution here against, and that if there is too much liquidity, too much surplus in the organization, it can cause some donors to react negatively and give elsewhere because they feel that there is not enough. If a congregation has enough money, more money than they're spending, then there isn't a need here, so they want to give somewhere else. I think that's one caution to be made aware of, but I think that we as pastors and session members and finance people in the congregation, if we can communicate to the congregation why we want to build up a surplus, protect against things like COVID, for one example, that we can make the case for why this is a healthy thing for a congregation to do and kind of prevent some of this donor giving elsewhere mentality. And so, nevertheless, the authors propose the following should be the primary financial objective for nonprofits, including congregations, and that is this: to ensure that financial resources are available when needed, as needed, at a reasonable cost, are protected from financial impairment, and are spent according to mission and donor purpose. And so on this next slide, we're kind of looking at, okay, if this is our goal, if this is our objective, creating a certain amount of liquidity in an organization, then the things we have to consider are more than just meeting the budget and having a slight surplus. We have to look at all these different things in an organization that can impact the cash position and liquidity position of an organization. Now, not all churches are going to have all of these various things, but to the extent that a church does have these different things, these are the things that are going to have an impact on our cash position. So one of them is, oops. Sorry, I got an incoming call here that made my screen go a little funky. Okay. So one of them is grants. Some congregations rely on grants, some do not. Some congregations have earned income, could be from a cell tower, could be from property that's rented out, could be from groups that are using the property for a fee. Donation trends. We're going to want to look at the balance between unrestricted and restricted net assets. If an organization has a high level of restricted net assets and with respect to unrestricted net assets, that's going to eventually or could possibly cause a liquidity crisis or within that congregation, because you may have a whole bunch of money, a whole bunch of assets, but that money can only be spent on certain things, such as a program or a mission, when there is a cash need in the congregation, such as fixing a heater or an air conditioning system. And you may have a lot of restricted assets that cannot be spent on fixing things like the heater. So you want to pay attention to the balance between unrestricted and restricted net assets. Endowment fund income, any investments, short-term investments or otherwise that the church may have, and the debt capacity. Does the congregation carry any debt? Does it have a line of credit? Does it have any long-term debt? All these types of things are going to impact the cash position of a congregation. And so if we're taking a more robust view of managing the liquidity of the congregation, it's not just that, have we met the budget? Do we have a surplus or not? It's taking into effect all these various different elements of finances that impact the cash position. So that is kind of the first part of it. We're looking at the kind of the rationale, and then what is the objective? What are we trying to accomplish with our financial management of the church? We're going to talk just briefly, just one slide here on mission and strategy. I think it's very important to remember that mission and strategy have a very significant impact on the financial situation of a congregation. This is something we could go into, again, much more deeply at a later date. But the first point is that mission and vision have to precede financial planning. If you don't know what you're going to do and how you're going to do it, it's going to be hard to get people to get behind you and support you with that financing. And it's also going to be hard to figure out how you align your finances in order to support that mission and vision, because that is the function ultimately in a nonprofit and in a church of finances, that they are there to fund the mission of your organization. One of the problems that we tend to have in the church, though, is that we tend to believe that everything that we do is important. We often see this come to a head when we have a deficit year and we're trying to figure out what we need to cut in our budget. But we tend to think that everything we do is important. And so what we need here, and I know this is much, much easier said than done, but what we need is a discipline of organized abandonment and the critical choices that involves. So organized abandonment involves a carefully planned reevaluation of our programs and activities with a pruning process that's applied to certain of those programs in order to free up resources for reapplication. So there's a lot in this right here. There's a lot we could talk about mission and strategy, but I think it's important to remember that mission and strategy are intimately tied to finances. And that if we want to really be effective, we have to evaluate who are we, what are we doing, how are we doing it, and then how do we need to align the financial resources of our congregation and other resources, our time, our volunteer time, staff time, but how do we align those in order to fund that mission in an effective way? And in times of transition, times of change, societal or organizational or local change, it's going to have to involve some critical abandonment and pruning of some things that we have done. And I realize that that is an extremely, extremely difficult thing to do in churches. So we'll move on to the next section here. We're focusing on structure, accountability, and ethics. So I would argue that at a minimum, a comprehensive financial structure for a church includes the following things. And as we're going through this, I encourage you to kind of think about what your church already has in place, and you may have all of these in place, but also pay attention if there's something that you may not have. And if you don't have something here, it may warrant a conversation with your leadership of your congregation or organization to figure out to what extent it would be appropriate to work on this in your organization. So the first one is pretty basic. It's a chart of accounts. So basically in your accounting system, do you have a chart of accounts where you list all the different areas where money is spent? Pretty basic, but if you don't have it, make sure you do. Next one is a financial plan. Just kind of this happens often in the finance and ministry of committee of the congregation or the presbytery, but kind of a basic overall financial plan. A fundraising plan. What is our approach to fundraising? How do we communicate the fundraising, and how do we execute the fundraising in our congregation? A cash flow plan, which we have been talking about a lot in the last section. Systems to support the processing of financial transactions and internal controls. So internal controls, we'll talk a bit more about policies in a minute, but internal controls are things like, do we have a formal written process, written policy on how we count cash donations and who has access and who carries the cash donations from the sanctuary to the place where those are counted, either in the church office or the business administrator's office. But do we have policies that list these types of internal controls? Also, internal controls would be things like who has access to the bank accounts, who has signing authority, who has online access to the accounts. We'll talk a bit more of those in the policy section, but those are important to have. A financial reporting system. So how do you generate financial reports? Is it something that's done automatically by your software program, or do you have some type of hybrid program where you run the reports and then somebody kind of translates those reports into an Excel file that's more easily read? What's your process there? A distribution system for financial reports. How are the financial reports distributed to those who need to see them, including staff members who may have oversight of certain budget areas, the church session or the church board, how are they receiving these? Do they receive them through the mail? Do they receive them at the session meeting? Do they receive printed copies, electronic copies? How is that handled? And how is the congregation? How are these reports distributed to the congregation? Are they available for anyone who wants to see them? Are they shared on a quarterly basis through email? Are they available hard copy in the church office? Are they available in the annual report? What do you have in terms of distributing that financial information to those who need to know? A system for reviewing financial results. Is it the finance committee or the session? How are they reviewing the financial reports and making analysis on that? And the communication of roles and responsibilities and accountabilities related to financial activity. So do you have, for example, in your operating manual, do you have a clear delineation and clear description of who has what roles and responsibilities related to financial activity, all the way from collecting cash to depositing checks to entering transactions into the financial software, accounting software. And a system for evaluating and adjusting to coincide with organizational goals and objectives. So how do we review our whole financial processes and reporting and make sure that it's providing the information that the organization and the leadership needs in order to see if those are aligning with the goals and objectives. And then finally, to what extent are you, do you need to, and are you reporting your financial results to external parties? If your church has a loan, the bank may require occasional reporting of your financial records to them. But you also, this could include also donors as well, and not just legal ones that are required by financing rules. So I think it's important to note this, and I think we forget this often in the church, is that financial responsibility is ultimately shared by everyone in the organization who has decision-making properties. Includes the board of directors, includes the session, it includes councils and committees, the executive director or pastor, other managerial program and staff. But everyone who in the organization who has decision-making properties has some responsibility to care for the finances of the organization. For one reason, it's because they're making decisions that have an impact on finances. But also, this is important, is that according to IRS laws governing nonprofit organizations, any of the above mentioned persons can be held liable for financial errors as long as there is sufficient evidence to presume that they should have known about the errors, and number two, that they could have acted to avoid them. And I think this is something that we often forget on sessions. And I think it's, in my opinion, it'd be a good thing to remind our sessions on a regular basis. So structure, accountability, and ethics. So based on your organizational structure, you may or may not have trustees in your church, but the session and the trustees, one or both of these bodies will have the following responsibilities. Number one is their responsibility to determine and guard the organization's mission. One of the things I believe is a strength of the Presbyterian Church is that we are led by our session and our pastors, not just by the pastor or not just by the session, but we work together. The session trustees have to set policies for ensuring that the organization operates according to its bylaws, the law, and ethical standards while pursuing its mission. The session must also engage in long-range strategic planning. It also has the responsibility to establish a fiscal policy and boundaries with budgets and financial controls. Session members have the responsibility to provide adequate resources for the activities of the organization, both through direct financial contributions and as a commitment to fundraising. This is, if we were having a course today or a workshop on fundraising, I think this is one thing that we would talk more importantly about, is that fundraising is not just the responsibility of the pastor or not just of the stewardship committee, but it is the responsibility of the session to be committed to fundraising for the organization and the church. Session, as we know, has the responsibility to evaluate the performance of the executive director or the pastor, and also develop and maintain a communication link within the church and the community, promoting the work of the congregation. And finally, they have a responsibility to monitor the performance of the church to maximize the welfare of the overall community and the overall congregation, and not just certain individuals within that congregation. But being a bit more specific on these responsibilities, here's a few other things the session should do. Create a vision. Create a vision. Raise funds. Communicate. Set policy, and to the extent that it's necessary, include rationale to why a policy is important. To assign responsibility, make sure that there is someone who is responsible for various aspects and not just saying that it should be done at some point, but who has the actual responsibility to do that. Establishing a budget. projecting cash flow, monitoring and amending the budget as is necessary. I think this is one thing that I often see overlooked in congregations, is that we set a budget, in the fall or the first part of the year, and then we just leave that be until the next. I think it's important for healthy congregations to monitor the budget and, as necessary, make adjustments throughout the year. A budget is effective to the extent that it shapes behavior of the congregation. If we just make it once a year and forget it, it's not going to do anything to shape the behavior of the congregation in terms of how it's spending money. So I think it's important to amend it and make changes as the time goes through. The church has responsibility to, or the session has responsibility to review the financial statements and then to report those results, to look for trends. We'll talk a bit more later today about how to find trends, develop long-range plans, evaluate results, and ensure internal controls. I think ensuring internal controls is an often overlooked part of this whole thing, and it can be very detrimental to congregations. The church that I served in Anaheim, before I got there, probably about 5 years before I got there, they had not, their internal controls had gone lax, and they had a staff member who was embezzling funds from them. And churches are, unfortunately, a pretty attractive target to people who want to do such things, because there is often a lack of internal controls in congregations. Okay, so moving on to financial policies. So why are policies important? One is that wisdom is enshrined in carefully developed and well thought out policies. When an organization embarks on creating a policy, they often, if they do it well, and they sometimes do, there's a lot of wisdom. They seek input from people who know things. They do a lot of research. And so that wisdom can be enshrined in these policies and passed on in the life of the organization without having to redo these things every 2 or 3 years when something new comes up and we forgot about what we did in the past. Also, policies communicate and they reinforce valued standard operating procedures. So what do we as an organization believe is a good standard operating procedure? Policies help us to communicate those things and reinforce those things. Policies help in the management of the organization, because particularly as the size of the organization grows, the key leaders, the staff members or the committee chairs, they can't be there for every decision that has to be made. And so policies help take that place to some extent. Policies protect the organization from various types of risks. And also, policies serve as an orientation tool for new volunteers or new board members or new staff. This is a very important thing, I think, in churches, because as we know, we may have committee members that serve for 3 years and then they rotate off. And if we don't have policies in place, some of that institutional wisdom or what the previous people used to do can be lost as members rotate off. And so policies help to enshrine those to make sure that it's passed on. So here are a few of the important financial policies. Again, if you have these, wonderful, or you may want to consider revising them or taking a look at them. But also, if you don't have them, you may want to think about adding some of these in. One of them is a liquidity target policy. This comes from what we were talking about earlier, and it may outline how many months of expenses are we to hold in cash reserves. This, if you do this well, and your board, your session signs off on it, it can help in those conversations where people say, we have too much money in reserves or too much money in cash, we need to spend that money. If you have a good policy that explains with some rationale there about why it's important for the organization to have this surplus, that can help in those conversations. Also, outlining the limits on how we are to use an operating reserve, including the purposes for which it can be used and the dollar target amount that it should be. For example, can your operating reserve be used to plug a budget gap in a otherwise normal year where you now have a deficit? Or is it to be held only for things that come out of the blue, such as COVID or other types of big building repairs? How are you going to use that operating reserve? What's appropriate way to use it or not? Accounting policies, are you going to be on a cash basis or general accounting GAAP, general accounting, I forget what it is, generally accepted accounting principles? I think only larger organizations, now here's where I'm not an accountant, so I don't know for sure, but I think only larger organizations need to apply to GAAP or comply to GAAP. But also another one is an audit policy. What is your policy on having audits? How often do they happen? And who oversees that audit process? Cash management policy. We talked about this earlier. Cash handling. Who handles cash on a daily basis, and who also has access to wiring capabilities through the bank. Also, some banking policies are important to keep in mind. One of those areas would be target balances. What is the appropriate amount of money that we will keep in a banking account? On the one end, you want to make sure you have a minimum amount that's kept in there because lots of banks have fees. If you go below the minimum, you'll have to start charging fees. But also on the other end too, it's important to consider a maximum amount that you hold in a bank account. The recent events of the bank failures this last weekend and last week show why this is important, because if the FDIC insurance on a typical basis only insures up to $250,000 in a bank account. And if your church has more than $250,000 in one bank, first of all, good for you. But also secondly, if that bank fails, you may not get all of that money back unless the FDIC steps in, like it did with the Silicon Valley Bank this past week. So what's your maximum policy to make sure you don't go over that? What's your minimum policy for a bank, and how do you monitor that? Insurance and risk management policies. We won't go into this today too, but I'll make sure you have a way of reviewing your insurance coverage and your risk management policies in terms of liability and other types of things, property. Another policy important to have is purchasing policies. So some churches will say, like, for any expense over $5,000, we have to get 3 different bids from 3 different vendors. But what's your policy on that? Do you have a dollar limit? How many vendors do have to bid? And also restrictions on board members' conflict of interest. So does your church have a policy on, like, if you have on your session a roofer and the church needs a new roof, what policy do you have in place in order to allow or prevent that board member from bidding to work on the church's roof through his or her roofing company? In terms of financial planning policies, how is the budget created and how is it reviewed and revised throughout the year? Also, what is the maximum dollar expenditure that various positions can authorize? If does a staff member, pastor, or otherwise staff member have to sign off on a particular expenditure, or if it's above a certain amount, does it also require the approval from a committee chair, from the committee that's overseeing that budget item, in addition to the staff member? Does it also need to sign off from business manager or somebody else? What's your policy in terms of that? In terms of investment policies, again, this is something we could go into more detail on, but the first one is an investment policy statement, or an IPS. If your congregation has any funds that are invested in the stock market or bond market, I think it is absolutely critical that you have an investment policy statement. Investment policy statement basically outlines the types of investments that are appropriate for your investment manager to invest in and which ones they are to avoid. So they often include things like no more than 5% of our funds will be held in one individual company stock. No more than 70% of our funds will be in stocks. No more than 60% will be in bonds. It's an investment policy statement, but it's absolutely critical if you have anyone who's managing investments like an endowment. Also, it's critically important to have a restricted funds designation and expiration dates. One thing that our presbytery does and that I love is that we've been very good at this from what I've seen. So we recently set up some restricted funds, or about 10 years ago, I guess it was, from the Santa Maria funds. So they set up those funds, they set up the designation of what the money's to be used for, and they set a sunset date. So if the funds are not used by that date, then this is what happens to those funds. They go into the general fund. The church that I served in Florida did not have this. And so we had some restricted funds on our balance sheet from 15, 20 years ago that were set aside for certain programs that no longer existed for the congregation. So how do we honor the donor's intent to use those funds that they gave for a program that no longer exists? The church is in a pickle there. There's ways you can get around it, but it can be a hassle, and sometimes it require hiring of an attorney in order to get the release of those funds. So if you're raising restricted funds, and I would suggest even for minor things like a youth group mission trip, when you're making requests for people to give to the youth group mission trip, what are the funds going to be used for specifically? And if the monies cannot be used for that mission trip because it had to be canceled because of COVID or something like that, what happens to the money at that time? If you don't set that event, if you don't communicate that to the donors ahead of time, and you can't use the money for what it's intended for, you're going to have to go back to each of the individual donors and ask them what they want the money to be used for, or you have to return their funds back to them if you don't have something like this in place. Debt policies. What is the congregation's policy on debt? Do we take out debt or do we not? Internal controls, such as conflict of interest policies. We talked about the roofing contractor earlier. Can that contractor, bid on a project of the church? Whistleblower policies, fraud prevention, and audit prevention, or audit policies. External reporting policies. How do we report our financials to donors, to grantors if we are getting grants? And fundraising policies. So this first one we mentioned earlier, the policy that a donor intent cannot be honored. So if we raise money saying we're going to be used for this money for this particular purpose, and the donor gives money to be intending the money to be used for X purpose, and for some reason that cannot be honored, what do we do? Some churches will say if the amount given is less than $1,000, then the money will go into the general fund. If the amount is more than $1,000, then we will contact the original donor. So that there's a way that you can do that. Another one is a gift conversion policy. So if someone gifts something like stock to the church, what is the church's policy on that? Will the church continue to hold that stock, making a decision about when to sell it when the market is high? Or will it be immediately converted to cash? Most churches that I've seen that have this say that the stock will be sold as soon as possible once it is in the ownership of the church. So that way there's no kind of second guessing or trying to guess when we should sell it and when not to sell it. Just take the gift, convert it to cash immediately. Another one is what groups in church can ask for donations. This one is an interesting one. The church that I served in Georgia had a very strict policy where no group in the church could ask for donations other than the stewardship committee. Now, why did they have that? Well, because the stewardship committee was trying to do an official stewardship campaign to give money to the congregation. But then we had the church at the time had all kinds of groups that were asking for money. The first Sunday of the month, the youth group would go to do a moment for mission in the worship service and ask for money for their activities. Then the next week, the women's group would ask for donations for their activities. Then the next week, the men's group would ask for donations. And so it was a constant barrage of people in the congregation, different groups, and asking for donations to their various ministries. So that caused a problem where people in the congregation felt they're always, every time they showed up at church, somebody was asking them for money. Where if you have kind of a coordinated effort of people working together, you can kind of strategize that a bit better, and then you can handle that distribution of funds throughout the year. But some people felt that was too heavy-handed of the stewardship committee. Some liked it, some did not. So it's just a conversation to have within your church about who can ask for money. Policy regarding restricted funds solicitation and acceptance. So so if somebody comes to your congregation, comes to your session and says, I want to give $5,000. Actually, I'll use an example that actually happened in the church in Georgia. Somebody came and said, I want to give about $30,000 to the church in order to redo the carpet in the sanctuary, but I will only give the money if the carpet is green. And so the session had to decide, are we going to accept this money with that type of condition that's placed on the funds? And so it's important, I mean, it's helpful to have a discussion ahead of time and make sure that the session has to approve all restricted fund donations, because the session, if they're going to accept money with conditions, then they are locking the organization into following those conditions. So it's important that any donation that goes before the congregation with, or the session with some type of restriction on it, be voted on and approved by the session, decide if it's willing to enter into that type of agreement. And lastly, data integrity policies. So this in terms of records retention, what retention policies for records do we have? And also privacy and security in terms of things like, I mean, this is a broad thing, but who has access to the church's financial software and how is that information secured? All right, so now we're going to move on to the 3 financial statements. I'm not going to talk a whole lot here, but I'm going to talk briefly about this because it'll go into the last section that we're going to talk about, which is the financial reporting, financial reports and ratios. So quickly, there are 3 financial statements that are probably the most important for congregations. The first one is the balance sheet, also called the statement of financial position. It has 3 main categories. One is the assets, things that the church owns, and they are typically listed in order of liquidity. So things that are most liquid at the top, so that's cash, and things that are less liquid or less able to be converted into cash at the bottom, things like real estate, inventory, fixed assets, etc. It's important to note here that for most churches, if you look at the fixed assets on the balance sheet, things like buildings and property, inventory, it's usually not reliably updated on the balance sheet. It just depends on what has been the history of that organization. For-profit businesses that are publicly traded, you have to adjust those on a regular basis and account for things like depreciation and whatever. For churches, most of the time, those things are not at market value. They may be at cost value. They may be at some other thing because they had a bookkeeper who at one point was adjusting them for depreciation, but then you have a new bookkeeper that comes in and no longer adjusts them for depreciation or market value. So they're usually not reliable. The second part of the balance sheet is the liabilities, things that the church owes. And the last one is net assets. I'm going to talk a little bit more about here and on the next slide about net assets, because this one is easily confused in congregations. So there are basically 4 categories in net assets. The first one is permanently donor restricted funds. So these are funds where a donor says, places a permanent restriction. So they say, for example, I will donate $1 million to the church. That $1 million has to be permanently invested, cannot be spent, and the income from that money can be spent. That will be a permanently donor restricted fund, and that should be broken out on your balance sheet of your congregation. Next one is temporarily donated restricted funds. So this is where a donor, like it says, places a temporary restriction on the funds. They say, I will give you $5,000 as long as the money is to be used for, its use is restricted for the mission market that we're having in the spring. You can spend all the money as long as it's spent for the mission market, and that would be a temporarily donor restricted fund. That should be broken out on the balance sheet. The third main category is unrestricted assets. So these are assets that they have no restriction. They're not permanently restricted, and they're not temporarily restricted by donors. There is often, churches have a third category called board restricted funds. So these are funds that the board, has placed a restriction on. So this would be something like an operating reserve, where the session may say, we will set aside $50,000 to be held as a restricted operating reserve restricted fund. Now, that is a restriction that was placed on that money by the board, by the session, not by a donor. And according to FASB 117, which is an accounting thing that governs nonprofits, since it is restricted by the board and not by a donor, it should be shown in the unrestricted assets section, not in the restricted funds section. And the reason for this is that if a board places a restriction on a fund, like a session restricts a fund, a later session can remove that restriction. So it's not done by a donor, it's done by the board, and the board can change its mind. Now, one thing that I often hear in session meetings when they're going through a balance sheet is people don't understand what the unrestricted assets are about. They think that we can spend what is in the unrestricted assets. But here's a balance sheet. I like them when they're laid out like this, but they have assets on one side and liabilities and equity on the other side, because it's easy to see that the two sides should balance. Many of our financial reports will just put them all in one big line, and it's easy to forget that these two sides need to balance. So on this side, you have assets. You have your current assets, like a checking account, savings account, petty cash, inventory. You'd have your buildings, your lands, etc. Total assets. Liabilities on this side, you would have anything that you owe, so accounts payable, lines of credit, any long-term debt. Those would be your total liabilities. And then down here is where you would have your here it's called equity, because I took this from a for-profit company, but in ours it would be called net assets. And so you'd have unrestricted net assets and you'd have your restricted assets. And so then the total total net assets plus the total liabilities would equal your total liabilities and equity, which would match over here. Now, as an example, let's say that someone gives us a gift of $1 million to the congregation. Oops. So they're going to give $1 million in cash to the organization, and they're going to say that it is unrestricted. We can spend it any way we want. Well, if we take this balance sheet and we're going to add that $1 million, we're going to have $1 million more in our checking account, and we'll have $1 million more in our unrestricted assets because they didn't restrict it. Because you have to add something to this side, you have to add something to this side in order for these two to balance. So if somebody gives us $1 million in gift, $1 million is going to go up on our checking account, and $1 million is going to go up on our unrestricted net assets. Now, if somebody thinks that we can spend the cash and the unrestricted net assets, they would think from this we could spend the $1 million here and the $1 million here, making $2 million, but that's not true. We can only spend the $1 million. So one way to think about this in terms of a balance sheet is that things that are over here have been distributed across and invested in the assets over here. So that $1 million that was over here in the unrestricted net assets just means it has no restriction, and it's distributed over into our checking account. So that's where the money can be spent, not from both sides. But I mean, it's kind of a hard concept to get, but I've heard a lot of times in session meetings where people want to try to spend the unrestricted assets over on the balance sheet in addition to spending money that we have in assets. So I may not have presented that as closely as as clearly as I could, but hopefully that'll provide some help for you. All right, so the other financial statement in addition to the balance sheet is the income statement, also called a statement of activity. Some cautions here, these are again some cautions that I often see in session meetings, is that an income statement does not necessarily reflect cash flow. So if you have a positive $1 million on your income statement, It does not necessarily mean that you have a positive cash flow of $1 million. Why is that? It depends a lot on how your chart of accounts and your accounting software is set up. But for one, here's an example. If your church accounts for depreciation as an expense in the income statement, not all churches do, but if your church does, it's going to increase the amount of expenses. But since it's a non-cash expense, it is not going to impact the cash balance that you have on that account. So if you factor in depreciation, it's going to show that you have more expenses, but you have not spent more cash because it's a non-cash expense. Another one that comes up a lot in churches is investment gain or loss. If you have an unrealized investment gain in a year, so your investments in the stock market have gone up, not last year, but in some year, and if that's reflected as an unrealized gain on your income statement, it's going to show as a more positive than it actually was in terms of your cash. And the last one we just talked about in the previous example. So a statement of cash flows is a third one, and this shows how cash changes from one period to the next. Now I have to clarify that not all church income statements have these non-cash expenses on them. It just depends on how your chart of accounts are set up. All right, so financial reports and ratios. This, I believe, is going to be the most, well, I hope it is, the most beneficial part of this presentation for you all. I think it's some place where you can really add some value to your churches. So right now, most congregations that I'm aware of, they provide a written report to the financial statements to the board of directors and the finance committee that has all the chart of accounts listed out. I think that is extremely important to do. It's very transparent, and transparency is critical. It builds trust in the organization. I should continue to do that. But I think there's also something we could do in addition to this. One thing to remember is that the treasurer or the business administrator or the finance chair, whoever it is that presents the reports, they should remember that they should use these financial reports to show how the financial results facilitated and enhanced present and future mission achievement of the congregation. Keep in mind, this is again linking the finances back to the mission of the congregation. Don't just report numbers, but how have the finances of the congregation helped this congregation be better and do more in ministry, or be more effective in ministry? I think that's a critical part. And we'll skip over that for running out of time. All right, so objectives of financial reports. Accurate and timely representation of the financial situation. I think both of these are critical, accurate and timely. I know of one congregation that prepared their financial reports, and they were usually delayed by 2 to 2.5 months by the time they got their the actual reports were about 2.5 months behind. And what happened for them is they had no current idea of their current financial situation, and they often ran into cash flow liquidity issues in their checking account because they did not receive the reports on time. So I think it's critical to have those on time. With modern software, depending on your staffing situation, or if you outsource it, near real time is not out of the question if you have the right staffing and software set up. Again, the objective of the financial reports, focus again on the mission. Recognize that the financial report itself is not an end of itself. It is there to report about how you're using funds for ministry. Emphasize report usability. If people on session cannot understand the reports, they're not going to be very useful for those members on session. But they're also an evidence of accountability. This is a part where the supervision of the session comes into play, that these are also for very important to make sure that people are doing what they're supposed to be doing. And this one I think is very interesting here. Lilly did a study, and they showed that revamping financial policies and reports was a very strong key in turning around organizations that were struggling financially. So financial reports can be a very important tool if you're trying to turn around an organization. And this one here is showing different ways that we can utilize and evaluate our financial situation. The bottom one is kind of what most congregations do right now: budget variance analysis. Did we meet our budget? Did our income, budgeted income, meet our actual income, et cetera? That's a fundamental level. Everybody should be doing that. What I'm going to add on today is the second layer of financial ratio analysis. It's a bit more advanced, but I think we can do it in a simple way that can be done very easily on church staffs and for sessions. And I'll show you what I mean by that. So financial ratio analysis can help you see trends in your organization over time. It can help you see the financial strength of your organization at one point in time, and also help you compare your organization to other organizations of the same size. So basically, financial ratios is you're taking data from the financial reports and you're comparing the data. So here's one basic cash ratio. I think we could do this in every congregation that we have. You're taking the cash and cash equivalents from your balance sheet, dividing it by your current liabilities. If you start doing this on a monthly basis and you can plot it in a graph, you can see in a graphic representation how your cash balance is changing in your congregation, rather than just seeing the reports and trying to remember, well, we have $20,000 in cash this month, but how much did we have last month? I think we had 19, but I don't remember. But if you can present it in a graphic form, you can see those trends over time. And it also shows you how important it is, how easy you can cover your cash obligation, your financial obligations. Now, here's one that's very interesting and very appropriate in terms of COVID. So what is your cash reserve ratio? So look on your balance sheet, take your cash and cash equivalents, divide it by the total annual expenses of your congregation. It's going to show how long, as a fraction of a year, the organization could meet most operating expenses if revenues were cut off. In terms of our personal finances, we consider this like our emergency fund. If we lost our job today, how many months of savings will we have in our savings account? Most nonprofits had ratios that ranged from 0.61 to 1.13, which means they could continue to pay their expenses if they lost all of their income for 6 months to 1.1 years, so 6 months to 13 months. Churches, when they were surveyed, the median value was 0.06. So they had cash and equivalents on hand to last, if their revenue was totally cut off, less than a month and pay all their expenses, including salary. In another study, they had 0.21, which would mean that they had about 2 months worth of expenses. We saw this, this happened at the beginning of COVID. Churches' donations were cut off. I know several churches in the Los Ranchos Presbytery, where I served before coming to Santa Barbara, where within the first month or two, they were unable to meet their payroll. And so that is an extremely important one to keep an eye on. I know that we're coming close to the end of our time, so I'm going to kind of skip through. I can present these slides to you in form if you want, but these are different types of ratios that we can look at to help us understand how the financial situation of our church changes over time and how it compares to other congregations. Now, unfortunately, I've searched quite a bit, and if somebody can find it, I'd love to see it. But there's not a whole lot of information about how churches stack up in these ratios. So there's not a lot of benchmark data available, but it'd be so interesting to see how it happens. So here, we have 3 points on financial ratios, and then I'm going to show you the beautiful financial statement that I think our congregations could do. One, when you're using financial ratios, always exercise caution when drawing conclusions. Secondly, ratios are one piece in your overall evaluation. You have to look at what is unique about your organization. So just because you have one ratio that's very different from a different congregation, it doesn't necessarily mean it's better or worse. You have to look at what is unique about your organization and what does that say about your situation. And then you can start with the trend analysis of your own organization. How does this ratio change in our organization over time? It can tell you, are we building up cash? Are we lowering down cash? Are our expenses exceeding our income by how much? And what's the trend? It really helps you to see a lot of trends in your organization. And then if the data ever exists, you can compare it to other churches. So a church that has a similar worship size as you or a similar budget size of you, how do their financial ratios compare to what you have? And then finally, here's the much awaited beautiful financial statement. So in addition to providing the Excel spreadsheets, the reports, the 14-page reports, it would be very easy to compile something like this for your congregation, not with these exact things because we don't have sales outstanding, but here's one of the ratios. And this shows how the ratio in the congregation has changed over time. And if it exceeds or goes below a certain kind of set point, you can get a warning. Current ratio, here's a different type of financial ratio. But you can figure out what ratios and what reports here are important for a session to see. And I think something like this, when presented along with the financial statements of a congregation, would really help session members be able to more focus in on what is important. So this has like inventory. This is taken from a for-profit organization. But something, how is our giving? This might be our giving trend. How many giving dollars per giving units in a congregation, or weekly offerings divided by weekly attendance. And you'd be able to see quite quickly and easily at every session meeting the trends over time. So I haven't been able to find any churches that are doing this. I couldn't find any examples like this, so I took this example here from a for-profit, but I think it's something that could be done for a congregation. So with that, I'll stop screen sharing.
Thank you, Jason.
So we flew through that.
Are you ready for questions?
Sure.
Okay, we've got 3 in the chat, and then we can open it up to everyone else. The first one came from Dave Worth. The second one came from Kurt Leonard, and I'm not sure if it's a question, Kurt, or a comment. And then we have one from Ted. So we'll go in that order. And then if you also have a question that is not in chat, go ahead and use the raise your hand feature.
Hey, Jason, Dave Worth. The
Hi.
question is, you talked about, later you clarified operating reserves. But my experience with churches is when they're operating as you described them, how do you recommend carrying over budget surpluses so that they're available? I find everyone wants to put them in restricted funds or not show them available for future. I heard you talking about board restricted funds, and perhaps the answer.
Yeah, I think so in one sense of that, I think if an amount has been budgeted to a committee, that amount should not carry over to the next year. So like if the youth ministry was budgeted and they didn't spend all their money, I don't think that money should be carried over directly into the youth ministry for the next year. I think it should go into the general operating fund. And I think basically any money that's spent the previous year carried over into the kind of a, well, at my church in Florida, we called it an operating reserve. And so that basically any money that was unspent the previous year went into the operating reserve. And then we had a policy about how big that operating reserve could get. If it got to be too big, then we would need to vote on, do we move it into reserved funds? Do we spend some of it? What do we do? But I think having an initial step of it being into an operating reserve is a good step.
Yeah, so I find that programs that didn't spend their budget would argue, but we were being budget conscious, not wanting to, and then, the others had spent it all. So then you don't end up in surplus because everybody's trying to spend their budget. It's sort of like I watch government, that last month, everybody's spending everything.
Right. Yeah,
so avoiding that becomes, how do you balance all that?
Yeah, I think part of it is trying to, throughout the year or during the budgeting process, try to avoid statements such as, well, you guys didn't spend all your money last year. Do you really need that much next year?
Right.
So I think if you have that if that statement is shared, then people start to feel like we got to spend all our stuff. But if you try to avoid that statement in terms of, well, instead of saying like, what did you do last year? Do you really need that much? Try to focus the conversation on what are your plans for next year and what do you need to make that happen, rather than focusing on the past. It kind of can help cut those comments off.
Thanks.
So Kurt? Was
Oh,
that a
it's-
statement or question?
My response was just intended to be a response to Dave, and he's kind of clarified more what he was asking.
Okay,
So never mind.
okay, thanks. And then Ted, you've got a question in chat.
Yeah, man, thanks for today. And we asked in the chat also if we could possibly get the slides. And I noticed it's recording, so it'd be great to show this to sessions and for, in our case, the support team. But you know, we have a very specific situation coming up, which some of you guys are aware of. We'll be selling real property and getting hopefully quite a bit of money. And so, but other churches have endowments also, and this may apply to them. So I heard you say about bank balances. You don't want to put more than 250 in any one bank for obvious reasons. What do we do with investment managers? Should we have, like, it should all, you know, accounting for, you know, total depravity and original sin and all that, should we spread our money out a little bit between different financial managers, just so that if one really goes off the charts, we don't lose it all? Or should we, you know, should churches have everything managed by Fidelity or the Presbyterian Foundation or some one person that we've come to trust? Thank you.
Yeah, I think in the vast majority of cases, having one investment manager is perfectly fine for congregations. But it's important there that the church has an investment policy statement that helps guide that investment manager, and also that there is the appropriate background checks and vetting of that investment manager. I mean, Los Ranchos Presbytery has, I think, $15 million or something like that, and it's all with investment manager. And I don't see a problem with that. I think when you get to be on foundations that have hundreds of millions of dollars or billions of dollars, maybe fund managers, separate fund managers might be appropriate, but for most congregations, I don't see a problem with one, given the appropriate qualifications of that one.
All right, thank you.
All right, does anyone have a question? Just put your little hand up and like that, and no more questions, comments?
I've got a question. We've, you know, I've seen this in a couple of church budgets in our presbytery that, and where do we show it as a question? So for example, for years we did a budget that balanced, right, at the end, at the bottom line, or it was maybe a slight deficit budget, right? So we showed it as a deficit budget. But then we decided but then when we started having COVID hit and investments go down and donations go down, we decided instead that on the income line, we're going to plan to show that we're going to make these two lines. And I think First Santa Barbara had these at one time: sustainable withdrawal from investment, and then unsustainable withdrawal from investment. So if we're budgeting, we know we're in trouble. For us, this sent the message to the congregation that, hey, we're doing something unsustainable now. We can't do this much longer. But what do you think about that? About showing those in the income side, where you have like, let's say you set a mark like 5% of your investment principal, that you're going to be able to withdraw every year sustainably, knowing that you can make an average back and keep that and preserve and conserve that principle. And then if you get into some really tough years, you can plan a couple of years of unsustainable withdrawals, but then that's got to stop at some point. What should those, is it legit to put those lines in the income side, do you think, Jason? Or should we just keep showing deficits at the bottom and just tell people, well, we can't have these big deficits anymore?
Sure, yeah. So one thing to note is that budgets are not the same as the three financial statements that I recommended or mentioned: the budgets, the income statement, the cash flow, and the balance sheet. So in terms of budgets, there's no real generally accepted principle for how budgets are presented. The main thing that budgets do is they are designed to curb and guide behavior. And so whatever is, I mean, they're often structured in a way that looks like an income statement, but it's not actually an income statement. So whatever needs to be done in order to communicate the information and to provide ways to curb behavior or guide behavior, I think that's that can be done.
Thank you, Jason. Jen Fraser, I see your hand raised, and you can unmute yourself as well.
Yeah, so Jason, first of all, thanks. That was a lot, and
It was a lot.
I don't have a question so much as a comment, and but first I'd just say there were different parts of what you presented here that I think are going to go that are important. One for financial committee, one for the session, one for the treasurer, business manager. Anyway. But you did say something about policies. I mean, you talked a bit about policies and transparencies and the importance of that. And I thought that was really important. And you made a comment that I haven't heard somebody say in a while, but I experienced it, where you said churches can be really attractive for those who have sort of nefarious intentions, right? Because of our tendency to we do have a lot of financial assets, and we also are sort of more casual organizations. We don't have as many institutional policies as maybe we should. Anyway, so I had an experience at a church where there was somebody who was involved in the financial part of our church had some financial responsibilities, and we had to remove them. And in the process, we were having a discussion at a session level about the need to remove this person, and it was actually said in the church, like in the meeting, but this is the church. Do you really think somebody's going to steal money? And I thought, it's amazing. It was pretty shocking to me, the I don't know, maybe the naivete or the sense of, we have such a sense of relationship with one another that sometimes I think we come to the church with rose-colored glasses or something along those lines.
Yeah, we do. And it's not just that the churches are attractive to people who may have nefarious purposes, but also just someone who has otherwise good intentions put in a situation where there is little oversight or the opportunity can find themselves drawn into unsavory actions.
Yeah.
Yeah. And I'll just mention quickly, there's I know a lot of churches do bookkeeping in-house, but one way of kind of preventing some of this is there are very affordable ways to outsource bookkeeping. One that I was looking at, an organization that just does bookkeeping for churches, was for a congregation of about 80 members or so. They were only going to charge like $350 a month for bookkeeping. And you still have to have somebody on site to write checks, but you would have a total third party who has no access to cash or checks or anything, writing the reports every month and reconciling all the transactions. So that's an attractive thing, I think.
Dave, you have a question?
Yeah, well, just a comment. When you're talking about policies, I had the experience of a member who was in charge of our investments, who then went through brain cancer and radiation, and the board did not restrict his continuing to do that. And I think it's important to have some, on a policy level, things that would deal with health, or I've watched sessions with people who are developing senility or memory loss and are given huge responsibilities. And if there aren't policies, then it looks like you're personally attacking this person who's going through all this. And it's very awkward, but it led to some really hard decisions because they were making bad decisions on behalf of the session and thought they were doing quite fine, but they didn't remember what they had done.
Thank you for sharing that. That's yeah, bad situation to be in.
For sure. Anyone else with a question or comment before we wrap this up? All right, seeing or hearing none, I think we should let Jason know how much we appreciated him today. So, if you can use your little reactions, thumbs up or applause or whatever you want to do, hearts, that'd be great. So, thanks, Jason. It was really great. I think we
Great,
all.
thanks. I'm happy to share the slides too. I know we went through a lot of material very quickly,
Yep.
so.
So I'm about to cut off the recording. So if there's anything you want said, now's the time to say it. Okay.